Okay, so picture this. You finally made it right. You're living the dream. Miami oceanfront condo, maybe even a penthouse, who knows?
Nice.
And the best part, you don't even have to worry about it sitting empty because it's rented out most of the year to vacationers.
Yeah.
You're off on adventures.
Sounds pretty glamorous, right?
It does sound pretty glamorous, right? Condo hotels, they really do feel like that dream. But let's be real, are they actually a good investment? That is what we're diving into today. We're looking at Miami Real Group, specifically their Miami Real news outlet, to break down what you actually need to know.
Yeah, it's so easy to get caught up in the lifestyle, right? The fantasy of it all. But smart investing, especially in a market as hot as Miami that takes a bit more than sunshine and a margarita by the pool.
Totally. And this report actually really hammers home the importance of choosing the right brand name when you're looking at condo hotels. So why in this specific niche of real estate is the brand name so crucial?
Okay, think about it like this. You're booking a hotel, maybe even in Miami, right?
Yeah.
Are you clicking on that no-name option you've never heard of, No Frills Basic?
Yeah.
Or your eyes drawn to the Ritz-Carlton, the Four Seasons, those big names we all know?
It's vacation time. I want those tiny little shampoos.
Exactly. You want the experience,
You
right?
want it all.
And you're not alone. People gravitate towards these established brands, and that means higher occupancy rates for your unit. They're willing to pay a premium for that consistency, that high-end experience. And for you as the owner, that translates into better nightly rates, which of course that's what's going to impact your income. Plus, you're tapping into their global marketing power. You don't have to worry about getting the word out there.
So what you're saying is even if a luxury brand takes a bigger cut from the rental income because they're attracting more guests with higher prices, I might actually end up making more money in the long run.
You got it. It's not just about the percentage you're giving up. It's about the overall pie.
Right.
And Miami Real Group, they gave a really interesting example in their report. Let's say you have a no-name hotel offer you 60% of the rental income. Sounds pretty good, right?
Yeah, that sounds like a great deal.
But then there's the Four Seasons next door, and they're only offering 40% to owners.
Okay, so less of a cut.
But here's the kicker. The Four Seasons might be pulling in double the nightly rate and have way higher occupancy throughout the entire year.
So that smaller slice suddenly starts to look a lot bigger because the pie is humongous.
Exactly. It's all about the bigger picture.
Okay, that's a really good way to look at it. So let's dive into this whole revenue split thing a little bit deeper, because I buy this condo, the hotel is handling the renting out, but I'm obviously not pocketing every single dollar. What does a typical split look like, and what are those fees that are getting skimmed off the top?
So basically, think of yourself as a silent partner in this. The hotel is taking care of everything: marketing, hookings, cleaning, even fixing that leaky faucet in the middle of the night.
Yeah.
All the stuff you probably don't want to deal with.
Especially not on vacation.
Exactly. So in return for those management services, they take a cut. And typically, owners receive anywhere between 35% to 60% of the revenue.
That makes sense. Okay, so that makes sense. But one thing that really jumped out at me in this report was the mention that you can't get future income projections when you're buying into these condo hotels. Why all the secrecy? How am I supposed to make an informed choice if I don't even know what to expect down the line?
It's not really about secrecy. It's more about those legal loopholes. The
Yeah.
SEC, those financial watchdogs,
Yeah.
they're incredibly strict about preventing developers from making promises they can't keep.
Okay, so no get-rich-quick guarantees.
Exactly. It's all about protecting investors.
That makes sense. So how do you actually go about evaluating the earning potential of one of these units without having those projections in hand?
It really comes down to doing your research. It's like checking out online reviews before you try a new restaurant. Even though developers can't promise you the future, existing properties have a track record you can learn from Miami. Real Group really emphasizes this. You want to see consistent positive reviews and a solid history of occupancy to feel good about your investment.
So past performance isn't a guarantee, but it's at least a good indicator.
Exactly. It gives you a place to start.
Okay, got it. Look at the history. But even the best restaurants have off nights, and the reports seem pretty realistic about the fact that there are just no guarantees in life, especially when it comes to real estate. So what kind of unexpected curveballs could rock the condo hotel boat, even in a dream location like Miami?
Well, even paradise has its rainy days, right? We're talking economic downturns, where people might cut back on travel, political instability, or even something like a major hurricane could impact tourism. All these factors affect occupancy rates, and ultimately that's going to hit your bottom line.
So what can you do to weather those storms? Does the report offer any advice on that?
Absolutely. Having a solid plan B is crucial. Choosing properties in high-demand locations like maybe near a convention center or popular attractions can help there. Demand in those areas tends to stay strong even when times are tough.
Makes sense. So closer to the action, less likely to be impacted by broader trends.
Exactly. And it never hurts to have a financial cushion as well. You want to be able to cover your costs even if there's a little dip in occupancy, just in case.
So plan for the best, prepare for the worst, good life advice in general.
Exactly.
Anything else we should touch on before we wrap up this deep dive?
Miami Real Group really stresses the importance of due diligence above all else. Knowledge is power in this game. Condo hotels can be incredibly lucrative, but only if you do your research and go in with a clear understanding of both the amazing opportunities and the potential risks involved.
They definitely sound a lot more complex than those glossy brochures make it seem. So to sum it all up for our listeners who are maybe thinking about taking the plunge, what matters most for condo hotel investors?
It's all about choosing the right brand for higher occupancy and those better nightly rates. Understanding the revenue split and what impacts your cut, looking at a property's historical data to gauge its potential success, and always having a backup plan.
A backup plan for your backup plan.
Exactly. You can never be too prepared.
Love it. Well said. So there you have it, folks. Don't let those ocean views cloud your judgment. Go in informed, make those smart decisions, and who knows, maybe you'll be sipping margaritas in your own Miami condo hotel before you know it.
Cheers to that.
Now, here's something to ponder as you continue your research. This whole report focused on Miami, but do these same principles apply everywhere? What factors might make other cities better or worse for condo hotel investment? Something to chew on as you explore this exciting but complex world. And as always, happy diving.